Look, we're looking at Bitcoin versus their index, their stock index. So Bitcoin's obliterating it. And then that's kind of the theme of everything. If we look at the NASDAQ composite, Bitcoin's obliterating it, even in times right now. So I don't know which way you want me to cut. If we look at gold, well, again, Bitcoin's obliterating it. Let's keep going. Healthcare is supposed to be like really, really safe. You can see it's been on a massive uprise, and it's doing really well. All of crypto is obliterating safe healthcare stocks. Bitcoin is still better. If we look at biotechnology, which is considered a risk-off asset, it looks really good. And it just happens to be that Bitcoin is obliterating it. If I were to be honest with you, I think these videos are just a little bit selfish because, to be honest, I start off with the research for me. I want to know what to invest in. I want to know where to put my parents' money, my fiance's money, where to put my money, my life savings, because things are looking a little bit scary. If you haven't noticed, the world has been crashing all over. Traditional finance is looking a little shaky. It's getting out of control. And honestly, the last 2 years was like a movie. And I'm pretty sure a lot of you are agreeing with what I'm saying right now. The world is changing for sure. And in recent history, very rapid. So I make these videos to try to figure out what I'm doing with myself. And then I appreciate you guys for allowing me to be able to communicate my research principles with you. So today I want to look at, again, like always, cryptocurrency, Bitcoin specifically, how it relays out to other investments in the world. I'm going to compare and contrast. It just happens to be every time I do this, and I try to look at it as unbiased as possible, all roads lead to Bitcoin and crypto. Now, I'm just to be clear, okay? I'm referencing longer time frames. If you want shorter time frame decisions, well, Will and Aaron and Matt called in my group this recent dump. You can head on over to the $5 5-day trial. You get all types of opinions. You'll get short-term opinions and long-term opinions. I am a master at long-term investing, so it's great to have a little bit of everything. So to me, just to be clear with everybody, Bitcoin and cryptocurrency looks pretty bullish. Now, I'm going to be speaking a lot in the context of Bitcoin specifically, but when I mean Bitcoin, I mean the entire cryptocurrency market. That's what I mean, because Bitcoin, it's like an index. There's other indexes called the total and the total too, but Bitcoin specifically, it moves everything. Where Bitcoin goes, everything else goes. And nobody can deny that at all. So when I speak in terms of Bitcoin, I mean all of crypto just looks like the best investment, even when the world's falling. Like when the sky is falling and everybody's like freaking out right now, Bitcoin still looks the greatest. I don't know what you guys want me to tell you. It kind of looks like cash in the short term is the greatest, and then Bitcoin's like the second greatest. But guys, head on over to my Twitter because this is getting me really bullish. You guys know Elon Musk bought Twitter. I am definitely in some way, shape, or form shadow banned, okay, for sure. So a lot of the notifications for the YouTube videos will be on my Twitter account. Also, there's this poll here. I asked, what's the strongest community in the space? Because they're both extremely strong. Hex was winning like really bad. It was like winning by a lot. And then the ADA community just came in with the heat. The winner of this contest will get a video made for them. So it looks like Cardano is going to get the video. Okay. I want people to follow me on Twitter because I will spend a lot more time. I will be creating threads. I will be making videos. I will be giving coin calls on my Twitter. So follow me at AlexOnCrypto on Twitter. It's censorship free now. Now, you might not believe what everything Elon Musk does, and neither do I. But I will say this man has created multiple successful businesses and some of the products that I use. So personally, I think he will probably do something good to Twitter. And there has been a lot of censorship, especially around cryptocurrency on different platforms. It's absolutely crazy. And as a cryptocurrency influencer, I know this best. So I need to diversify my audience, and I really want to push everybody to my Twitter right now. Honestly, I should have way more followers. I don't know why I haven't been, using Twitter longer, but in recent history, I've been focusing on it. So head on over to Twitter. Take action in the poll and wait for the giveaway. I will be launching a massive giveaway as well as be making coin calls on my Twitter account. So head on over to Alex on Crypto. Also, you guys know I have a trading group. We talk about all of my investment principles, everything I've ever known, on-chain investigation, fundamental analysis, technical analysis, short-term trading, long-term trading. Head on over to the $5 5-day trial and the pin comment below. And that's all my shills. I'm shilling. That's all everything. So here's the basic story of what's going on in all financial markets. This is what's going on. We've gone from record easing to record tightening. Now, let me explain the concept. We're going to be diving into macro conditions. The reason why I'm attacking macro conditions specifically right now is because the Federal Reserve is making a lot of decisions that's affecting everything in the world. So we have to know what's going on in the macro environment. It's very important. And if you haven't researched the macro game, get your knowledge up. Get your knowledge up, okay? We're not here to make excuses. We're here to do everything as best as we possibly can. So let me explain two simple concepts in macro world. And it's definitely more complex than this, but I'm trying to break it down for you very easy. So we have hawkish Fed policy, okay? The Federal Reserve controls monetary and fiscal policy, and typically they can move the markets either in a hawkish formation or hawkish Fed policy or dovish Fed policy. So when they bring out the hawkish Fed policy, they are lowering spending. They are doing things like rate hikes, right? Which we've been recently seeing. They are stopping the money printing and they're trying to lower inflation. This is typically what they do with hawkish Fed policy. And then it's flipping the script, the exact opposite, which is dovish Fed policy. This is when, we had that major event in 2020, but I can't say this on YouTube, but the major event that shook the entire world. They went with these quantitative easing programs. They did liquidity swaps. They did all types of printing variations to inject liquidity into the entire world, basically, not just the United States, but the entire world, and stimulate the economy. So it's either hawkish or dovish. Remember those two terms. Hawkish means they're lowering spending. Dovish means they're increasing spending. And basically, in recent history, it's been getting really volatile. In 2020, with this massive event, we had record easing or dovish Fed policy. Now that we had all this printing and there was a massive amount of money injected into the, and so much new money diluting the value of your dollar, and inflation is being searched like crazy, and everybody's wising up. Oh man, inflation's happening. Now they're coming in with the record tightening to cut back on inflation. So it's kind of like this give take thing where it's like a cycle, and then hopefully, the Federal Reserve can keep that cycle going up over a long period of time. But all of this is really normal, and it's not anything out of the question. It just depends on what they do specifically. So I think there's a lot of crypto guys out there that think what they're doing with federal policy is inherently evil. Maybe, but that's how we've been running for 94 years. So you kind of got to gauge it for what it is, right? So and we look at the stock market, risk on assets, the overall story right now in the macro world, and what a lot of people have been agreeing, and to a certain extent, I agree in the short term. I just don't think it's going to play out in the long term this way. But a lot of people are basically saying, hey, we're seeing risk on assets start to fall because of hawkish Fed policy that's coming out right now. Right now, in the last couple of months, they're like, let's decrease spending. Let's fight inflation. Let's, put these rate hikes, right? So the cost of borrowing money is way more expensive. So you can't borrow as much money, and people are less enticed to let the money printer go burr, right? That's the point. Less printing is causing people to consolidate and become more safe or defensive investing. And you see cracks. You see cracks in this financial system. For example, Netflix is a great example. I mean, you could say cryptocurrency is risky all day, but Netflix dropped 71.81% in the past 163 days. That's not safe. That is not safe. And this is a tech company. And we saw it first actually with Facebook, and Facebook's down 52%. So at least it's falling pretty bad. Actually, I'm not going to say at least it hasn't fallen. It's falling pretty bad. And now what I did here is I looked at Bitcoin versus Facebook. So when this chart goes up, it means that Bitcoin's doing better than Facebook. And then when it goes down, that means Facebook's doing better than Bitcoin. And you can see that we're going to probably break a new all-time high in this context of Bitcoin versus Facebook. So I thought it was interesting to kind of show that Bitcoin, just even with this market turbulence, all this volatility and this defensive investing, Bitcoin looks like it's holding up pretty well. I don't really care, what perspective you look at it, guys. I know, we're probably going to get some type of dump in the stock market. And I also know that Bitcoin is considered a risk on asset and it's correlated to the stock market. But still, even knowing all of these things, I cannot find another investment. And this is the theme of this video and what I'm going to be talking about. I looked high and wide for another investment. I looked into biotechnology. I looked into healthcare, all of these defensive investing tactics, and none of them look good compared to crypto. And I'm saying this from an unbiased perspective. Even if we look at cryptocurrency companies, For example, Coinbase, even if we look at the companies, they look bad. Coin is down 64.97%. And this is a crypto company. So it's very interesting. And if we compare Bitcoin to Coinbase stock, you can see Bitcoin's still doing better than all of them. So I don't know what you guys want me to tell you. And then if we look at equities, for example, this is comparing Bitcoin to equities, which is like similar to the housing market. Bitcoin looks great. If we look at equities versus USD, you could see it's been tanking and people are getting scared. So with these rate hikes, we see risk on assets tanking, not all of them, but some of them. And then we also see people getting a little bit scared with the housing market. So these things are happening. It's real, maybe in the short term. Now I'm trying to analyze everything that's going on and try to give you guys an overall perspective because, people seem to think it's just like one way. Like when they're coming out with hawkish Fed policy, all risk on assets are just going to die. And I don't know if that's necessarily true. I can't say that, with a straight face because right now, how the world has been moving, we've been getting into a time where people are wising up, right? They're wising up with their investments. I don't think people, maybe the ultra rich think this way, but I think like accredited investors, the normal rich people, when they see everything that's happening right now, the investor sentiment is changing. People are not just going to go buy bonds, right? People are not going to buy T-bills and bonds, right? I don't think that's the overall sentiment. It was back in the day with hawkish Fed policy. So back in the day when they did these things, like people, it's pretty obvious where people would go, right? They would go to bonds, right? Because this is like considered safe. But I don't know if that's true anymore. And I'm trying to make that case and I'm trying to figure out why people will go to bonds, but I just can't find a really good reason. Now, if we look at Bianco Research, this is a really good chart right here that I want to show you because it shows epic bond market moves. So when we see the bond market going up, I want to explain bonds very simple to you guys because it's basically kind of an IOU. So if you have a lot of money, let's say you have $1 billion and you want to make like a stable yield, you can give it to the United States government in the form of a 10-year bond, and they will give you an IOU. Hey, not only will we give you your money back, but we'll give you interest every single whatever, right? Depending on what bond you picked, right? So they're giving you interest and they're going to give you your money back. Now, this is considered very safe because people look at the United States as having high credibility and the chances of them giving you your money back are very high. And this has been the same way throughout history. Now, what we've been seeing now in the bond market is a little bit scary. So you see these big price increases. Now, let's look at government bonds right now. We see that over time, it's decreasing. Now, this might look bad for the normal person that doesn't understand bonds, but we're looking at the bond yield. So really, it's inverted. If it goes down, that means more people are buying bonds and the yield is decreasing. If it goes up, that means less people are buying bonds and the yield is increasing. So you can see that over time, people have really good confidence in bonds. But since this 2020 event, it shook up everything. And you can see the yield has been going exponential. It's been going up pretty aggressive. And this is a V-shaped recovery. This is actually pretty scary right here. And bonds have been in a bubble. This is like a bond bubble. People are calling it like people are getting scared of bonds. I don't think anyone can, deny what I'm saying right here. People are getting scared of what bonds have to offer. And you can see the yield is going up a lot. This is very bad. People are not confining in bonds for safety, at least since 2020, right? At least since 2020, people are not buying bonds. It's not like the safety thing anymore. Now, if we look at other bonds across the world, you can see a similar trend. If we look at Japan, bonds look, first off, fake. Let's make this a little bit longer time frame. Yeah, it still looks fake, but it's going up. Bond yields are going up. No one wants to buy it there. China's a little bit different, but notice that it's kind of like when it does get that shot up, which we did make a higher low, as you can see here, a higher low. When it does get that rise up, it's pretty aggressive. So as you can see here, pretty aggressive. And it also looks like people don't really invest in China government bonds as much as they do. As you can see, it's kind of sideways. But look, we made a low and then a higher low. So I do expect it to go up. The bond yield looks bad. I mean, obviously in Germany, it's pretty bad, right? It's like all over the world, it's pretty bad. UK, looking like the same thing as the United States. People are not buying bonds anymore. And I don't think, we're looking at Mexico. And the reason why I'm looking at Mexico is because Mexico is one of the biggest trade partners of the United States. So we do have to see how their government is acting. And again, similar story. People are just getting a little bit scared of, fiat or government-backed things that the government credibility is on the line, people are just like, hey, like maybe the government's not like the best way to invest our money. I don't blame them for it, because there's just so much new type of investment vehicles out there. There's new investment apps. There's so much other opportunity. That's not the only thing anymore. So if we look at the overall story, we could see from the federal funds rate right here, we can clearly see that, hawkish Fed policy, they increase the rate hikes, right? And then, we see dovish in 2020, and they decreased it all the way down. So it was very cheap to borrow money, right? So it stimulated the economy. And then now we're coming back into this hawkish Fed policy. And if we come over here, now that you understand how bonds work, the rising is the bad thing, right? When it rises, the yield is increasing. Nobody's buying bonds. You could see every time we had this massive rise, they had to break something to get things back in order. What do I mean by that? So in 1987, a revisit of 10% 30-year yields broke the stock market. So, literally right here in 1987, you could see that they changed, okay? They changed, from dovish to hawkish. So they went hawkish, and they broke the stock market. They literally broke the stock market trying to get the bonds back in order. And same thing happened in 1994. Same thing happened in 2006. Essentially, they will increase hawkish Fed policy and try to fight inflation until something breaks. That's the gist here. Let me read it at the bottom for you. And this is from Bianco Research, high credibility. We believe Powell has been very clear in his message, but managers are not buying it. Hike until something breaks. Rate hikes until something breaks is now the unofficial policy. This could mean a plunging stock market economy or runaway inflation, but the Fed is not stopping until something breaks. So they're going to increase rate hikes. They're going to keep, hawkish Fed policy, decrease spending, and force basically the United States into a recession and fix inflation. That's their goal. They're trying to fix it, and they don't care. They'll keep going until something breaks. Now, there's two kind of contrary beliefs here. Now, this is very, very complicated and not for the normal person, so I'm not going to go through everything, and you could definitely follow this guy on Twitter. It was a pretty good thread. That's his handle right there. But if we scroll down, he makes a point at the end, right? You want the Fed to deliver on those hikes. So everybody's basically like on the same page. They're all like, okay, rate hikes are for sure. Hawkish Fed policy, everyone... You could ask any macro investor. They're all thinking the same thing. They're all like, okay, rate hikes are for sure. The economy's coming down. People are going into defensive investing. I'm going to get out of risk on assets, and I'm going to do some type of defensive move or whatever the case is. Everybody's thinking that basically in their head. And he's thinking the contrary, okay? He's thinking, if you want the Fed to deliver on those rate hikes, you can't crash the market. Bring it back over here, what they're saying. I don't think the United States wants to crash the market. I think that's probably, if they control the monetary system, they don't care about money. They care about controlling the population first and foremost. They want power, right? So I don't think it's going to be very hard for them, at least right now, at the highest potential of the United States to be dethroned as the world power in the world since we ever experienced since, United States has been out, right? If you can literally say that. Since the United States has been in power, this is the highest chance for the United States to lose its world reserve currency and world power, and its domination. It has a high chance of doing that. So they don't want to crash the economy. If they crash the economy, then there's a really high chance of revolution or external conflict or somebody else getting involved and taking over. So he's basically saying, right, you can't crash the market. They may say they're not going to tolerate it, but with record slowdown and fast data, record slowdown, what they mean is in transport data. So we see it happening, supply chain issues. Remember, America has this dominance over the world reserve currency, but there's other countries like China that have dominance over America in a different way. Like, for example, manufacturing or, supplies, like everything. We get a lot of we import a lot. We're one of the biggest in the world. So they can say, hey, you know what? You don't want to give us money. You don't want to stimulate our economy. Let's stop giving you exports or whatever the case is. They can, it's like a pull tug, right? It's not just about money. It's about a lot of things, right? So we have to consider they may be primed to disappoint. So I just don't think right now is a good time for the Federal Reserve to want to crash the economy is what I'm saying. I just think it's very unlikely that they're just going to crash everything right now, especially with a very high chance of them losing control. I don't think this is true. Now, a second thing I will point out is that when the government or the Federal Reserve, which is at the top of the line, starts doing things like hawkish Fed policy and forcing the United States into kind of a recession, the other parts of the world suffer way worse. So in United States, risk on assets do bad, blah, blah, blah. We see stocks doing really bad, and then everybody kind of suffers a little bit. But the sides of the world that don't have like an economic dominance like the United States, they suffer way worse. They suffer way worse because the whole world is kind of reliant on the United States for their dollar, right? And remember, it's the world reserve currency. So they suffer 10 times worse. Especially other countries with hyperinflation and stuff like that. You can see higher rates slowing China. China's suffering. Also, we can see, lockdowns will pull the rug out from under U.S. truckers this summer, right? So we see lockdowns in China slowing everything. The whole economy will come to a halt if they don't stimulate. If they don't print more money, the whole economy comes to a halt. And you can see it here. U.S. Yield differential collapse prompted outflows from China bond market. People are jumping out of China, right? We're seeing the insecurities in other markets start to happen at an aggressive rate. We see the CSI 300 index, the Shanghai index, just dumping. We see their stock market doing worse before ours, right? So like it's almost like United States is the last domino. We could see a recession/depression in the United States, but it's like the last domino. Like other parts of the world suffer first. And as they're suffering, they're going to start pulling the strings of the United States and using their strategic advantages over the United States to prompt them to do something. That's what's going to happen, okay? And I think we shouldn't rely on this job market data, right? Because a lot of what Jerome Powell is saying is like, oh, we got the jobs back, so it's okay. We can start, hawkish Fed policy again. We can start the rate hikes because everybody's employed, so everybody's happy. We can start the rate hikes again. But the problem is we're seeing with data right now, new job postings lowering in the United States. So although they fixed it, by the way, this looks artificial, right? We're looking at unemployment rate, and you can see that it skyrocketed unemployment with the 2020 event. Again, this like shook the whole world, right? And then we got it back down, but it just looks fake and it looks very insecure and it looks like it could break, guys. One big external or internal event, one big revolution, one big war, something, one big event can just destroy everything. And it just looks really like a house of cards, right? Is what I'm trying to explain. And we see new job postings on Indeed lowering all over, and we see it in multiple places. So, I can't say that we could just rely on the job market because remember, other places like China can destroy our job market. They can destroy our job market. Now, if we look at indexes in a form of actual currency, so now we're looking at the actual power of the currency. This is a really good indicator, right? Because if we look at the DXY, now what we're looking at is US dollar currency index. So this is the power of the US dollar. We're coming up at this point here. Now, ever since we have this hawkish Fed policy, the DXY has been going up in value because everybody's cashing out. Like I said, we said it multiple times. Everybody's getting defensive. They're moving over to cash. They want cash. And it's funny because even on other parts of the world, like I told you, when hawkish Fed policy happens, other parts of the world go into more hyperinflation. Their dollar starts to suffer. So nobody wants to hold these other foreign currencies. Even in other countries, they want to hold the DXY or they want to hold the dollar, the USD. So you can see everyone, including United States and other parts of the country, are all fleeing to the US dollar right now. You can see it because of hawkish Fed policy and risk on assets are we see them tanking right now actually. There's a couple people that are pointing this out that we're coming. This is a technical analysis perspective. So this is the DXY. We're coming up to this point here where we could reject down. And this is what I think is going to happen. What I think is going to happen is that everybody's fleeting to the dollar right now. But remember, if we come back over here, we had hawkish, dovish, and then hawkish. So we had hawkish here. And then when the 2020 event hit, we went dovish. If we bring back over this chart here, it kind of looks a little bit similar, right? So it looks like, the dollar kind of moves with their Fed policy. And this is true. But again, the case I'm trying to make is other sides of the world are having a really hard time with their currencies because of this hawkish Fed policy. So you can see here, the Japanese yen is tanking. It looks really bad, actually. So if I'm in Japan, I'm not trying to hold the yen. I want to hold the US dollar, right? And then if I'm in Canada, I want to hold the US dollar. And then if I'm in European countries, I want to hold the US dollar, right? And then, if you're in Bitcoin, I don't know if you want to hold the US dollar. I have a little bit of both, of course. I have Bitcoin and the US dollar. But the point I'm trying to make is very simple. United States is smart, right? The United States is smart. They know that if they pull out this hawkish Fed policy, it will allow them to go dovish in the future. It will allow them to stimulate the economy in the future and hold its power. Remember, they're at the top. Now, I want to bring up this quick chart here, and it will start to make sense a little bit more. This is a hard concept to understand, and I'm going to work my way with you guys trying to understand what's going on. But the gist is that like it's a big ass game. That's the truth. It's a big ass like financial game. It's like tugging and pulling all over the world. But the point is that what's at top, okay, is the most important. Okay, the Federal Reserve and businesses are like kind of running the show, and I'll explain what I'm saying. And everybody's fighting over resources, but really, the resource that's finite is humans' time. That's the important part that everybody just misses for some reason. I don't think the Federal Reserve cares about USD. They don't care about any of that. What they care about is power. That's what they care about. They want to be able to run human time. They want as much human time as possible. They want to control as much as possible. So everything is kind of irrelevant. And I'll explain what I'm trying to say. We have bonds looking very insecure for other parts of the world, and maybe a little bit insecure for even the United States. We have foreign exchange currencies looking really bad on other parts of the world, but really good for the United States, which is giving basically the United States dry powder. Okay. Now, there's this one thing I want to show you guys. It's called liquidity swaps, because in the 2020 event, we did see that they actually, did something called liquidity swaps. Now, I want you to understand what they mean, and then you'll just by natural nature know that it's complete BS. So in times of like really, they call it the last resort, right? It's actually called right here, the lender of last resort. It's an institution and it acts as a provider of liquidity to other financial institutions. So we know, and we saw this in 2020 with the big black swan event, that when there's huge turbulence in the market and there's a lot of insecurities and basically high unemployment and all these things that lead to economic turmoil, they go to this last option, liquidity swaps. Now, we're looking at a scientific peer-reviewed paper here, and we're looking at quantitative easing policy. They're basically claiming that quantitative easing policy has not lost its effectiveness over time, even though less predictable announcements today clearly have larger impacts on bond yields. Basically, what they're saying is that it's still effective to do things like liquidity swaps, but in the same framework, however, cannot explain the financial market impact of QE in emerging economies. In emerging economies, we need either additional country-specific shocks such as intervention. What they're explaining is they're saying, oh yeah, it's good for the United States when we do quantitative easing or printing of money. But in other parts of the world, we can't really say if it's good or bad. And what I'm saying here, just from kind of just natural thinking, it is bad. Liquidity swaps, all it is other parts of the world are suffering. They want to buy more United States assets, exactly what's happening now. So they literally print money out of thin air and give it to other banks. They just give it to other banks for no reason. They're literally just printing money and giving it to them for the only reason so that other people can accumulate USD. If that doesn't sound crazy, it is crazy. It's literally providing liquidity for no reason. They're just giving money to other parts of the world just so they can use USD. Now, again, what does the Federal Reserve want? The Federal Reserve wants USD to be the world reserve currency. And we see whatever action they're doing currently right now is making USD or the DXY increase in power. Why do they want people using USD? They're even willing to give away free money so that people use USD. Why do they want to do that? The reason why they do that is so that they can print more money and dilute their holdings. So as people pile into the DXY, including United States citizens, United States investors, not just other parts of the world, but even United States investors, as they all pile into cash, it gives the United States dry powder to print more in the future. So they can print more and then they devalue the DXY even more. They devalue the currency even more. They want more people to come into the Ponzi scheme so that they can devalue it more, guys. Are you not realizing what's going on? Liquidity swaps are the biggest BS I've ever seen in my life. And what I think is happening is that after I look at the world, right, and I look at how cryptocurrency works, there is no jurisdiction of crypto. There is no one place of crypto. It's a world currency. You can't say that about anything else, right? So we got this weird US thing going on, and I love United States, but they've been manipulating the entire world with the DXY, with the United States dollar. They've been manipulating everybody. They're at the top of the tower, guys. They're at the top of the pyramid. So they get to choose what happens to the US dollar. So as the world gets manipulated, the only thing that's kind of separate is crypto. That's the only thing separate. So when you think of as an investor right now, and trust me, investors are changing. If we look over here, you could see that there's only about 13 million accredited investors in 2020 in the United States. So I'm pretty sure it's a little bit more. But look, this Ray Dalio Principles for Dealing with the Changing World Order, which the gist is China is becoming a new world order and there's a high potential for the United States to lose its dominance. Basically, that's the point of the book. It literally says dealing with the changing world order. Look, 11 million views on this video. You can go watch for yourself. It's very insightful. I read the book and I watched this. But the point is that people are wising up to like, hey, maybe the United States maybe isn't the safest place ever. Let's kind of get out of bonds a little bit. Let's kind of get out of bonds. What's separate from bonds? Let's get out of the United States a little bit. That's what everybody's thinking. Investors are getting smarter. And we know this because Robinhood and Coinbase are the most popular apps on the App Store. And both of those are like new age investing tactics, like new age investing. We've never seen it before. One of them is completely different, which is Coinbase. And the other one is like this like retail style investing that we've never seen. So investors are becoming smarter. They are wisening up to the little tricks of the United States government. They are doing this. And again, no matter which way I look at it, Bitcoin just seems like the best thing in the world. Okay. We're looking at China. If we think China is going to become the new world currency or whatever, I doubt it. But if they're going to become the new world power, look, we're looking at Bitcoin versus their index, their stock index. So Bitcoin's obliterating it. And then that's kind of the theme of everything. If we look at the NASDAQ composite, so we're looking at Bitcoin versus the NASDAQ, which is all stock companies. Okay, Bitcoin's obliterating it, even in times right now. So I don't know which way you want me to cut. If we look at gold versus Bitcoin, now this is inverted. So when this goes down, that means Bitcoin is doing better than gold. Well, again, Bitcoin's obliterating it. Let's keep going. Healthcare is supposed to be like really, really safe. And it does look really safe. If we look at the S&P 500 healthcare companies or whatever, you can see it's been on a massive uprise. And it's doing really well. But let's look at it compared to Bitcoin. Or we looked at it actually in this case, in all of crypto. All of crypto is obliterating safe healthcare stocks. Bitcoin is still better. If we look at biotechnology, which is considered a risk-off asset, it looks really good. Even in this risky environment, it only tanked what? 25%? That's phenomenal. And it just happens to be that Bitcoin is obliterating it. So let me just try to wrap it up with everybody. And then I want to pull up this chart here because this chart is actually really important. And this will give me our overall view and everything I'm saying will start to make sense. So we have two big manipulative factors. We have companies, and we see the companies right now. We see Elon Musk buying Twitter and, the power that he has, right? We have these big companies that are kind of controlling everything in the world. Now, companies, you could say that they're borderless because they're all over, right? And they're in different jurisdictions. So they're kind of borderless, right? But a lot of them, like our United States stock market, for example, like you can't buy Tesla. You could say Tesla stock is borderless, kind of, but it still confines the United States. So you can't say it's completely borderless. But we have firms, which is like businesses, that use products and services to dictate what happens with humans. And then we have the Federal Reserve that uses monetary and fiscal policy to control what happens to the dollar, which controls what happens to all people, basically. But both of them are competing for what? The resources and attention of humans, right? So we have the Federal Reserve manipulating humans, and then we have, you can't say, you used to call it manipulation, but you could say it's influence, right? We have the Federal Reserve influencing investors and all humans. They're basically saying, hey, where are humans going to put their money, basically? And then we have firms and products like, hey, I have a nice product. Where are you going to put your money, right? So like you could buy things, right? That's the point I'm trying to make. So these two big powers are kind of like controlling the world right now. No matter how you cut it, and we can make so many different cases to what's safe and what's not safe, what's risk on and what's risk off, what's a commodity, what's not. Whatever investment people try to put their money into, the whole purpose of putting their money into it is to get more money in the future. Now, the reason why you get money in the first place is because you're kind of encapsulating your time. Because when you work a job, you're using your time to get this dollar so that you can therefore expend that time in the future to do things you like to do. So really, money is just an encapsulation of people's time, which is actually finite. You could print as much money as you want in the world, but you only have a certain amount of years on planet Earth. And the people above, the products or the firms and the Federal Reserve know this. The game is not money. The game is, how do you influence people to do what you want? That's the game. How do you take everyone else's time? That's the game. Wake up. How do you take everybody else's time and use it for the causes that you want? That is what the last battle, that is the last battle of what's going on in the world. So really, businesses like Elon Musk and stuff like that and the Federal Reserve are both competing for what? Resources of humans. And the thing is, and this is going to blow your mind, people in their brain dictate what is risk on and risk off. That's what a lot of people don't understand. It's like they're looking at, hawkish Fed policy and what's going on in the world right now and what's going on in the Federal Reserve. And they're like, oh, people are going to sell. So they're dictating the market psychology that everyone's going to move to risk off. And I do agree in the short term, it's currently happening right now. But I also will say that people are also getting smarter. And the new age, where the most millionaires on earth are usually invested in crypto and understand what crypto is. And they're switching their thoughts on crypto. They're switching. Their psychology is changing. And they're trusting the government less. They're trusting the government less. And they want to move to an external financial system. They want to get away from this whole game of the Federal Reserve and products and businesses competing for their resources. If they want to conserve their time the best, they're going to just try to exit everything. And this is a big, big shift. And I don't think crypto is just going to take over the world. That's not what I'm saying. What I'm saying is that when it comes to market size, right, compared to people's psychology right now, I think the market size of crypto is extremely small compared to how many people are changing over into this idealism of a new economy called crypto. The risk to reward in crypto is outstanding. It's outstanding. And we can see, here's just a little diagram of usually what happens. It's not exactly what it is, but as we live in humans and households, we do things like buy products from businesses or whatever. And it's kind of like a never ending cycle. And then really there's just a couple of entities that intervene, which is like the banking sector and the government sector. This is basically the Federal Reserve and banks and then firms, right? So they manipulate, all they're trying to do, their game is to try to get as many human resources as possible to do what they want. And then, I think humans are realizing that, and they're realizing that money's more important than just like kind of blindly giving it to some government entity or some, financial advisor. They don't want to blindly give it to financial advisors anymore because why? Because they're realizing that money is their time. And everybody wants to become financially independent. Everybody wants to live happy. So the best way to live happy is to put your money in some type of system that doesn't rely on people manipulating it is the point. And don't get me wrong, crypto is manipulated, but at least it's efficient in the fact that you know where the manipulation is coming from. The Federal Reserve is just ridiculous. It's ridiculous, the learning curve people have to go through to understand how they control the world. It's ridiculous. And I think cryptocurrency, the only power that people have, in crypto is having like too much of the supply, or it's just less manipulated is what I'm saying. It's more efficient. It's less manipulated. It's more transparent. And I think it's just an alternative system because people are losing faith in what's going on in the world. They're losing faith in what's going on in the world, and there's so much evidence of that. So yeah, this is a long video, but I really wanted to hit it home. The gist here is very simple. The world's crumbling. That's fine. Everybody knows this. The economy's shooken up. It's really scary. The Federal Reserve is making the same moves they always make. And people are gradually moving in their psychology over to a new monetary system that's different. They want something different. They want to try something new. They want a new experiment. And crypto has been successful since it has came out. And obviously there's a lot of scams like everything that's new and starting, but the risk to reward in crypto is outstanding still, even today's date. Even though Bitcoin is worth like whatever, $50,000, $40,000, whatever. It's still to this date a better risk to reward in crypto than anything else. Please tell me, leave it in the comment section below. What is safer than crypto right now? Please tell me. I still can't come up with a good answer, and I've been looking pretty deep. Remember, guys, everybody really in their head thinks, well, not everybody, but a lot of people are coming up to the conclusion that, hey, maybe the United States is not as powerful as we think. That's the conclusion that's happening right now. And I don't know if they're going to confine in the government again, over and over again to get manipulated, okay? To get manipulated with the DXY, which is, let me show you what I'm talking about. if we come over here to fork, like, look, this is like United States federal policy dry powder. This is their dry powder. They convinced the whole entire world to move into cash, and then boom, dovish Fed policy, print. And then as they're printing and devaluing the currency, they get to decide where that money goes. So they entice everybody to move into dollars, and then they print and devalue the money, and then they pick where that value goes. So this is just another trick for them to harvest your time and your resources as a human. Modern day slavery. That's it for this video. If you like the quality of this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. I know this was a long video. Rewatch it if you have to. Thanks for watching. Catch you guys in the next one.